Hey, everybody, welcome to Charts. And I got a big mug of coffee here. Charts and coffee. This thing, no kidding, this mug is darn near as big as my head. I wouldn't have it any other way. All right, I threw some honey in my coffee today. I don't know what I was thinking, but there is some buckwheat honey in my coffee, and I'm kind of liking it. So, welcome. Great to see everybody. Good morning. All right, it's FOMC day. This is clearly, they always say this is the most FO important. They're all important, but what's really interesting about this FOMC meeting is not necessarily the implications for March. It's the implications for May. And, I see a lot of folks talk about, hey, how do you trade FOMC? We don't want to trade FOMC. Not really. We don't want to necessarily be heavily positioned in front of the FOMC as if we're all sitting around our crystal balls and prognosticating about the future. I mean, I'll leave that stuff to the geniuses on television. Clearly they know. But the rest of us mortals, we're going to wait for the volatility. We're going to look at historical volatility. We're going to wait for the volatility and see the reaction. What I'm showing you right now is the way. I don't know of any other way that's going to be more accurate than this. This is called the Fed Fund Futures Target Rate Probabilities. What the heck is that? This is a study of the Fed Fund Futures contract. So folks that are far smarter than I'll ever be do nothing but guess at where the rates are going to be at the different meetings. So there's a contract that, as you can see here, corresponds with these meetings. And every one of these graphs I'm showing you looks at the contract and what the rate is expected to be from the FOMC. In other words, when we get to May, what are they expecting that rate to be? When we get to June, etc. This is the best way to understand two really important things. First of all, before the FOMC, what is discounted? What are we expecting? Well, we're expecting no hike this month. See that 0 to 25? That's where we are right now. That's the big column. How easy is that to read, right? And then the next column over, or the next contract over, now look at what column is the tallest. So 0 to 25, we've moved on from that. Now, come the March meeting, we're expecting, you guessed it, the 25 basis points, quarter point hike. Hence, now we're at the 25 to 50 column. Easy, right? Now, when you take a look at the economic calendar, now this is the Forex Factory calendar. This is the one that I've been using for a lot of years. It's easy to read. And for those of you that may not be, look, everyone knows FOMC is important. So that's an easy one. But what about other economic events? Well, you'll see exactly where I call these things hot zones because it corresponds with the color. It corresponds with the color of the event. And so Forex Factory, gosh, I've been using this since the late 2000s. And they've been putting these little color-coded icons. When I was a brand new Forex trader, I knew what the high impact scheduled events were in the US. I've been trading since the late 80s. But I did not know what they were for Mexico if I was trading the peso, or what they were for the Deutschmark back when I was trading that. I didn't know what those hot zones were. What were the important data points out of Germany? This was really easy. This gives you the color coding. You know how much I love color coding. So this is, of course, a red hot, as you can see, hot zone. Scheduled economic releases with high expectation for volatility. Okay, now this is the economic calendar. Of course, we would look at a earnings calendar for the hot zones for a stock, etc. So remember, we get the statement at 2, but that's only part 1 of the fun today. Part 2, and probably the more important event, is at 2:30, FOMC presser. All right. Why is that going to be important? That is not going to be a headline number or a statement release, right? No expectation and change of rates. We're going to expect some wording changes as we venture closer to the March rate hike. And the press conference will be really interesting. Again, we know there's going to be a hike, but then what happens after that? And if you look at the this right here, the data, once we get past March, it gets very fuzzy as to what's next after May. Are we going to get a hike? Are we going to get a one and done? We don't know. And that's why we have to continue to track the message from the FOMC. So I wanted to make sure I took a moment to really lay that out. I'm not guessing, I'm not prognosticating, I'm not going to do anything but show you where you can see a rate of change or measurable way to understand the Fed, the FOMC speak. Remember Greenspan? I'm sure a lot of you were trading and investing during the Greenspan era. We called it Greenspan speak, right? I don't believe Yellen had her own language, and Powell's pretty plain spoken, but Greenspan spoke in tongues. We all know this. Well, the way you measure how the markets are interpreting, they might mean one thing, but the interpretation might be another. It's like that game of telephone. Remember that? By the time you go around, what was actually repeated could be very different than what was intended. So this is how we measure it. Okay. Keep an eye on the dollar, keep an eye on the bond market. Those are easy places to watch. Okay. So of course, as always, our show is about your questions. So let's get to them. But I want to make sure everyone has a really clear and easy path to understanding what's happening with this FOMC event and how to measure it going forward. All right. So, by the way, I've been getting a lot of questions about the VIX. Take a look at where we are. This right here, automated Darvis, we're up near the range highs. This is resistance. Clearly, if you are looking at risk, it's very different at these heights, right? And you can see where sort of that sweet spot is for just moderate or just more tradable risk. Yeah, we're going to want to see this thing get back somewhere between 23 and 18. And this is the VIX futures contract. All right. So a lot of folks ask me about VIX. That's it. Yeah. We're going to feel the nosebleed heights up here, right? This is where things get tricky. And we know north of 23 is where they get tricky too. Pull this up. We know when volatility is going to kick in a way that, well, might be Dramamine inducing. All right. Okay. So first question up is our live trading in sector secrets today going to pass FOMC pass? Am I going to be with you at 2:00? So we have our monthly, we meet up every week, but there's the monthly session that all the masteries have. We just happen to go every week in sector secrets. So I'll be with you from 9:20 right after charts and coffee to 11:30. We're going to take a break and I'm going to log back in at 2 and we'll take a look at if anything looks interesting with the FOMC. So yeah, I'll probably see you all around 2 back in the room. All right, Megazord. Hey, Raghee, I just wanted to say personally, I think you're indeed heading in the right direction. Thank you very much. I appreciate that. You know, that's something I always ask in the free videos or even here in Charts and Coffee. You know, leave the comment, smash that like button. Let me know that, you know, what we're doing is, you know, helping and heading in the right direction. Of course, we're going to keep doing it. You know, we're now 1 full year. We started Charts and Coffee in October of 2020. And, you know, we're 1 full year plus of this show every single day. I think we took some time off this past Christmas for about 4 or 5 episodes, 4 or 5 shows, and that's about it. So, and a lot of holidays, you know, we get together even on the holidays sometimes. So I do appreciate that. I do appreciate that very much. All right, Kathy, good morning. What do I think about VLO? Sure. Underperforming boat in the XLE, in the wave. So I always want to focus on outperforming, but it's bouncing out of the wave. I hear you. Look, there's a lot to like in XLE and throw OIH in there as well. There's a lot to like. So if it's tracking, so Kathy, here's how I'll answer that. If it's tracking with the tide, right? If this individual boat is tracking with the tide, then yes, I don't have a problem with taking advantage of the individual stock. If we have a lot of boats tracking with the tide, try to take advantage of the tide because that's going to be the way we can bet on all the boats. All right. So I like XLE. I'm cool with VLO. I think that to your point, you bring up a great point. We've got to look at that open interest in vol, because some of the individual stocks, the individual boats in this broader sector, in this tide, can be kind of thin. So great point. And yes, pullback buys are absolutely valid. Now, relatedly, hey there, Shannon, do I like XOP? And, when it comes to XOP, look at the structure of XOP, right? Let's open this up a bit. Look at the structure. In other words, what's the market trend? That's the Dow theory jargon for what is the market doing? Is it moving higher, lower, sideways in a volatile way, or sideways in a very quiet way? So we have a neutral sideways market. We have since, as you can see here, mid-November. So this is chop. And this doesn't look like quiet sideways, does it? Not in any way, right? This does not look like quiet sideways, so it's chop. Charles Dow called that distribution. We call it chop, we call it slop, whatever you want. But its kind of formal name is its distribution. Wide sideways. And then this is not a trend like we see in XLE and OIH. So you can look at an oversold support level for XOP, but I would not prioritize XOP, Shannon. Great question. Why not XOP? Remember, crude oil is heading higher and taking oil stocks with it in the oil services and the energy select spider, because we have some geopolitical strife and we have inflation. That's going to help oil stocks in the XLE and OIH, but not necessarily oil explorers, which also have a lot of exposure to natty gas. So XOP is great when the equity markets are moving higher, when there's a demand narrative behind crude, and when we have natural gas moving higher as well. So XOP is a little bit different as to why we might look at that one and the catalyst for its movement. Thank you for the question. Next up, call one is asking for what are my thoughts on ASAN? ASAN. Downtrend. So how do we know it's a downtrend? How do we know this is heading lower? Right there, beginning of December. Red momentum, red trend, as we call it, red over red on the structure. That is a mark down. That is a downtrend. It's also below the 200 exponential. This is the propulsion that I have running here. And so this is bearish. This is a short the rip. This is absolutely a short the rip. If you're looking for shorts, this is one of them. If you're looking for opportunities to take advantage of strength and sell into it, get long puts, this is a great example of how you identify well, you know what? Let's look at it this way. Can you have a relative outperformer to the downside? Can you have the best downtrend? Absolutely. And that's a great looking downtrend. It checks all the boxes for me. So really good one there, Kawan. What are my thoughts on the dollar? Hey there, Mark. How are you? All right. So let's start out with DX. So I'm bullish the dollar, but that's more of a conversation that's related to sort of the macroeconomic environment that we're in terms of, well, the monetary policy. So this is chop, though. Take a look. We have been in chop in the US dollar since the end of December. Neutral momentum, which has had bouts of a little bit of bullishness and a little bit of bearishness, but neutral trend, neutral momentum, neutral trend. Yellow is neutral. So what is my thought on UUP? I want to get long. I need a setup. So I'm just going to wait until I get a setup. And that's what I'm waiting on. So definitely on the radar, Mark, definitely. Next up is MU. Okay, sure. So taking a look at MU. What do we have here in terms of MU? Well, back to structure. Neutral lower row, yellow and red upper row. The upper row is momentum, the lower row is trend. We separate out those four moving averages to separate 8, 13, 21 from 34. We have momentum reads, we have trend reads. They are not the same, A lot of traders will use those short-term EMAs and think the organization there is a trend. Oftentimes, it's way too twitchy. It's way too twitchy. So be careful with that. However, this is a buyable market because it's a chop. It's a chop market. But we have the support of the 200, support of previous Darvis automated support and resistance, neutral that's coming after an uptrend. So if you have an uptrend, it loses the trend, but it turns into chop. That's bullish bias still. So this is a bullish choppy market. It's still above the 200 as well, right? How easy is that? And that's what I'll be looking for. This could be a nice minor low pattern. So we'll be looking for possibly a breakout through that January 24 high. That's what I'd be looking at there, Primogenitor. All right. Okay, next up is, let's see what we have here. Oh, if you're wondering where the rate tool is, yeah, again, just Google this. Just Google CME FedWatch tool. Just Google that right there, and it'll be the first hit because the link is pretty long. So rather than give you the link, just Google CME FedWatch tool. All right. Okay, next up is Oz Gooner Guy. Good morning. I'm predominantly a Forex trader and currently going through a couple of my early Forex books. Oh gosh, it's funny. It's so funny. I was just reminiscing about my time on BabyPips. This is years ago when they turned me into a cartoon character. This is probably 10, 15 years ago. I can't even remember at this point. My last update for them was 5 years ago, right? I just haven't been updating, but I love this site for new Forex traders. And yeah, they turned me into Cleopatra because Raghee, which is my name, means Queen of Queens. So yes, that's what my name means. But here, everyone just calls me Raghee, and that means bad-tempered. So anyways, they turned me into a Queen of Queens, which I thought was hilarious. And no, I mean, you've got everything, Oz Gooner Guy. What I've done here with Simpler is take a lot of what I used to do, gosh, almost 20 years ago, automating. And it's available on TradingView, and it's available on Toss. And a lot of those tools now, Oz Gooner Guy, I've made free. I've made them free. They've been free for many, many, many moons. So check out what we're doing here at Simpler. I do have tools that work for Forex. I did a class for Forex just about a year or so ago. So check that out, and you'll get my up-to-date tools and strategies for Forex. And yes, I was so happy that just tickled me to no end. All right. So next up, and thank you for the question. Eric, do I consider chop on an uptrend as it moves down until it passes my propulsion? So if something is chop, and I would love for everyone to use sort of the lingo that I was raised on, the lingo of Dow theory, because that's where most of our technical analysis, a lot of our trend analysis, it came from Dow theory. So chop is known as distribution. Think about what that means. At the end of an uptrend, what's happening? Some folks are taking profit and they're distributing their stock to the people that are buying near the highs, right? So if we are in a distribution chop and I have the yellow, neutral, lower read on the JT multi, that tells me it's chop. And if we're still above the 200 propulsion, that's an important support level. That's the equator, bullish hemisphere, bearish hemisphere. So I won't consider it an uptrend. No, it's not an uptrend, but it's bullish chop. In other words, I'm going to favor an oversold buy. I'm going to favor the market trading down to support and buying that. I'm going to favor an oversold 20 reading and a signal on the slow stochastic. I'm going to favor a ready aim fire near the bottom of the indicator, right? So I'm going to favor the long side. Hope that helps. All right, next up, I noticed the three indices, HPMRs, are hugging each other. What exactly does that mean? So yeah, I don't have my toss running at the moment, but I think I can do this on, I think I've got it running on my trading view. So HPMRs, for those of you wondering, what the heck is an HPMR? So this is an indicator that I created a long time ago trading Forex. And it uses historical volatility data. I love this thing. It's unique in that rather than determining support and resistance based on price alone, which is what most indicators do, it's time and volatility, right? There's really four things we're always looking at: price, volume, volatility, time. Most of us don't need another price-based indicator. Most of us are looking at volume, volatility, and time. And this handles the last two, volatility and time. When the HPMRs are squished together, right? When they're very, very tight, what that tells you is volatility is above normal. Be careful. We saw that yesterday. Or you're just looking at take a look here. Yeah, be careful with something like that. But here, this is pretty normal looking, Trader Mo. And I'm going to hop into the Sector Secrets room. We'll talk about some HPMR questions here for our morning get together here. How do I feel about Tesla today, and what should we consider after hearing the earnings call? I don't listen to the earnings call. I'm not necessarily looking to trade Tesla until I see another setup. And I love the way it's responding around that 200. Minor low pattern setting up, 200 propulsion, neutral market since the beginning of December, oversold. Find an oversold stochastic, find a good support level. Darvis is in play here at about 887, 888, and the 200 propulsion is sitting at about 852. Keep an eye on that. And then I will wait till after earnings, right? Either the run up to or after. All right. Okay, gang. With that being said, as always, thank you so much for being here, part of the Caffeinate and Dominate crew. I appreciate the time. I appreciate the questions. Sorry I did not get to all of them. But again, great to see you all. Smash that like button. I do appreciate the time. And I'll see you tomorrow. Same time, same station.